Good morning. We will pay attention to the effect of debtors' allowances on cost of sales. When you reduce the debt of a debtor, you will record it in the debtors' allowances journal. Goods returned by the debtor means that you will have to do two double entries. One at the sales price to show that there's debtors' allowances and that the sales will decrease, and this will also have an effect on cost of sales because the goods are received back and it increases the inventory. A mistake on the invoice means that we took this wrong figure on the invoice and we calculated cost of sales, so the cost of sales figure is incorrect. If we delivered goods to a customer and there is something wrong with the goods, so it's damaged or it's shop soiled or whatever reason, and they are prepared to keep the goods but they are not returning the goods, it means that you will have to show that they owe you less money, but it will not have an effect on cost of sales because it will not reduce your cost price when you give discount to a customer. If you allow trade discount to your debtors and you forget to subtract the discount, it means that it will not have an effect on cost of sales because it doesn't reduce your cost price. Incorrect quality, color, size, etc. delivered will have an effect on the sales price, but will have no effect on the cost price. Because you are giving a discount to your customers, it will not reduce your cost price. Therefore, any deduction on the account of a debtor is recorded in the debtors' allowances journal. When the accounts of debtors are reduced, you must determine if it will have an effect on the cost price. The only exception is when the account is paid by debtor and discount is allowed. This will be recorded in the cash receipts journal and not in the debtors' allowances journal. Goods returned. The outstanding amount on Peter's account is 500 Rand. A credit note was issued to Peter for goods returned 40 and a profit of 25% on sales price is made. The entry will have an effect on cost of sales because the goods were returned. The inventory in the business will increase and the expense for cost of sales will be reduced because now the goods are not sold, so it can't be part of the expense for cost of sales anymore. If goods are returned, you have to do two double entries. The first double entry will be to reduce the debtors control account on the credit side to show that the debtors owe less money, and you will debit your debtors allowances account to show that the sales are actually reduced with 40 Rand at the sales price. The second double entry will be for the cost price. The inventory account will be debited to increase the inventory, and you will reduce the cost of sales account on the credit side with a cost price of 30 Rand. The profit was made on sales price. That means the sales price is 100%, the profit is 25, so the cost price is 75. The sales price is given as 40 Rand. So if you want to calculate the cost price, you will take the 75, the amount that you want, divided by the 100% that is known, times 40 Rand, and that will give me 30 Rand. The debtors control had a balance of 500. Assets always have debit balances. You will credit the debtors control to decrease this asset because they don't owe the sales price of 40 Rand anymore, and you will debit debtors allowances with 40 Rand to decrease your profits. Inventory will be increased with a cost price of 30 Rand because the inventory is put back into the business, and cost of sales, the expense will decrease on the credit side. Debtors allowances is debited because it will decrease your profits with 40. The things are not sold anymore, so it means that your profit will decrease. Debtors control is credited because you will reduce your assets. The debtors don't owe this money anymore. A credit note is issued to a debtor to indicate that their account will be credited to reduce their outstanding debt. This is recorded in the debtors allowances journal. For the second double entry, you will show that the inventories were returned, so your asset increased with the cost price of 30 Rand. Cost of sales is credited because you want to decrease the expense for cost of sales. If you decrease the expense, your profits will increase, therefore your owner's equity will increase with a cost price of 30 Rand. You will issue a credit note and it will be recorded in the debtors allowances journal. Mistake on an invoice. Peter notifies Mamelodi traders that the invoice was overcast with 200. So when the items that you sold to them were added, you added it up with 200 too much. You use this sales price to calculate the cost price. So therefore you also calculated the cost price with a higher amount that it is supposed to be. The business maintains a profit of 25% on cost price. The outstanding balance of Peter's account was 800 Rand. The entry will have an effect on cost of sales because you used the wrong sales price that was overcast. You also calculated the cost price on a higher figure. The expense for cost of sales will therefore have to reduce because it was calculated incorrectly, and you will show that your inventory will actually increase because you wrote a high amount in the inventory account to remove inventory from a business that was actually worth lower amount. You will have to complete 2 double entries. You will debit the debtors allowances account to indicate that the debtors allowances will reduce your profits because the sales price must decrease with the 200, and you will reduce your debtors control on the credit side with the 200 Rand because they owe 200 Rand less. To calculate the cost price, we will take the cost price profit is 100%. The profit that we made is 25. So the sales price equals 125. The sales price is given as 200 Rand. So if we calculate the cost price, the percentage that we want, 100, over the percentage that we know, 125, times 200 will give me 160 Rand. Inventories will therefore increase with 160 because it was credited with a higher amount that it was supposed to, and you will reduce your cost of sales expense with 160. The debtors control will be credited with 200 Rand to reduce the asset on the credit side. Debtors allowances is debited to increase the expense to reduce your profit. Inventory asset is debited to increase your assets, and cost of sales expense will be decreased on the credit side with 160 Rand. The debtors allowances account is debited so that the profits can decrease with 200, so equity will decrease. Debtors control is credited to decrease your assets with 200. A credit note is issued to the debtors as proof that you will reduce their account on the credit side. Inventory is debited to increase the asset. Cost of sales will be credited so that we can reduce the expense for cost of sales. And when we reduce the expense, our equity will increase with 160 Rand. Damaged goods are not returned. Peter notifies Mamelodi traders that goods delivered to him were damaged during delivery. He is prepared to keep these goods if we allow a discount of 20% to him. The undertaking agreed and reduced his account with 200 Rand. The undertaking maintains a profit of 25% on sales price. This entry will have no effect on cost of sales. Because the goods were damaged when we delivered it to our customer, we are reducing the amount that he owes us, but that will not reduce the amount that we paid when we bought the goods from the suppliers. So no effect on inventory and cost of sales. We will just show that debtors will decrease because they don't have to pay us this allowance that we made of 200, and we will debit debtors allowances to indicate that our profit will decrease with 200 Rand. Debtors allowances is debited to decrease profits, that will decrease equity. Debtors control is credited to decrease the assets, and we will issue a credit note. Mamelodi traders agreed to allow 20% trade discount. Madiba traders complained because the bookkeeper issued the invoice at 500 without subtracting the 20% trade discount. We have to correct this mistake. Mamelodi traders maintains a profit of 25% on cost price. Because we are giving him trade discount, it will have no effect on our cost of sales, because the cost price that we paid when we bought the goods from our suppliers will not decrease when we allow discount to one of our customers. We will only do an entry to indicate that the debtors control is reduced with 100 Rand and that expense debtors allowances will be debited with 100 Rand. What did we learn? When the account of a debtor must be reduced, the debtors allowances will be debited to reduce the total sales so that the profit can be reduced. Debtors control is credited to reduce the asset because the debtors owe us less money. When you do an entry for debtors allowances, you must determine if this specific entry will have an effect on cost of sales. So there are several entries that you record in the debtors allowances journal that will have an effect on sales price but not on the cost price. If it will reduce your cost of sales, the inventory is debited to increase the value of your inventory, and cost of sales will be credited to reduce the cost of sales.